Hi, everybody. July 4th. Happy 4th of July for our U.S. listeners, and happy Canada Day. I believe that was yesterday up north. Um, Feeling refreshed here. We've had a nice long weekend, and I just wanted to put a quick video out tonight about, well, it might not be that quick, but I just wanted to give you guys an update. We've had a few different deals that have been going by on the private placement side. And we have one in particular that I would love everyone to focus on right now because it's really an important deal in the Cobalt space. And also, I'm just going to get my screen ready to share here so I can take you through the PowerPoint a little bit. Sorry, one second. I'm going to move over to the Mozilla. And here we go. Okay. And so, as you guys know, the Cobalt sector has been on my radar recently, and it's one of these areas that I've done a good amount of research on in the last, call it, month, 6 weeks, whatever it is. Came on my radar probably about 6 weeks ago, maybe 2 months ago, and it's an area that I believe is going to explode higher again. It had a big run earlier this year, and it's cooled off here. We're in that consolidation period after the initial first run in some of these bull markets that seem to just take off out of nowhere. This is a special one. It's really what I want to get into today with Castle Silver Resources. I think this is my top pick over the next 12 to 18 months. It's certainly up there. So, if you don't own anything in Cobalt or a lot, I would encourage you to take this one seriously in terms of a look. You can always buy it in the open market if you're not an accredited investor. But one of the big benefits, and I'm going to be recording this for both our Issuer Direct members as well as the Gold Investment Letter Premium members, one of the big benefits here, and I want to just remind everyone of the vision that I've had with building out that Issuer Direct platform, working closely with some of our elite members, is that if we can pool our capital together, and if we have, say, for example, like in this case, $1 million that we put together, we can get terrific terms on deals that will really, be low-hanging fruit in terms of the pricing that we're getting. In addition to that, the warrants, are the big deal. And so Castle Silver had just about been closing up. This goes back about 10 days, 2 weeks ago, closing up a $1 million offering, 20-cent unit with a 30-cent warrant, good for 24 months, full warrant. And I found this company and really just looked at it closely and said, this is the one. These guys have got the best Cobalt story, hands down, that exists out there that I've found. I really don't think there's another one that's better, and I'll get into why that is and why I feel confident in that statement. But I really, this is one of those opportunities where I went to the company cold through the investor relations representative and essentially said, give us, if you will expand this offering and let us give you another $1 million under the terms that are there, which they already had pretty much done, and the stock has been trading 20% higher than that, 25% higher than that around the quarter, 26 cents, 24 cents Canadian. I can give you the coverage in the Gold Investment Letter. You're going to get it for free. It's going to be an automatic thing that we do, and we take a nice position in these stories. And that's very appealing for these companies. So, luckily in this case, Frank Bassa, the CEO, was receptive, and they decided that they would extend it. Now, the problem with this one is that we had about 650 in interest from our elite members and a few friends of mine and myself. And then the holiday hit, and so we've been quiet, but we only have until Friday with this one to finish our order. So if you have interest, what we want to do is you want to email me right away. I'm going to introduce you to the company. You'll get the documents. Just get the ball rolling on the documents and the money. And if we need an extra day or two, because we have a few people that haven't gotten it in yet, I'll work on that with Frank. But they want to close this by Friday. And so this one's going to go away quick, and I think the stock is absolutely ready to take off. I'm going to get into a little bit of the PowerPoint and the fundamentals. First, I'm going to go to, let's take a look at the chart. This is CSR on the Toronto Venture Exchange. As you can see, stock took off late January under a dime, went up basically quadrupled, hit as high of 30 cents here in April, and has been basing ever since. It's one of those situations where, you know, this is basically a tight triangle situation here. I just want to make sure you guys are seeing the actual, there you go. This is a tight triangle situation. I'm actually going to point it out. You saw it here too. So this is what was happening here. Nice little triangle, boom. When these triangle patterns hit, it's very basic technical stuff. I don't get crazy into technicals, but there are basics that I absolutely look at. And one of my favorite patterns is the flagging pattern and or triangle pattern, which we're seeing here. And I've mentioned this before. This one's tight. So I don't, you know, this one's not going to last long. It's going to bust up. What happens is that the longer the basing period or the longer the consolidation, it's like a coiled spring. And so the move, if it's a long basing period, is going to be more explosive than less explosive. Sometimes if it's really, really short and tight, it'll go up and it'll keep doing that in sort of a stair-step motion like this. But in this case, you know, it's actually perfect because we've seen the consolidation happening for months. We've already, the MACD is down. It's been below zero, and the bars are below zero. It's been consolidating and could easily turn right back up. And that's what is basically going to happen. I can tell you right now, when I get this story out there over the next week or two, we'll be well in the 30s. I think that by the time the checks clear and the certificates are cut on this one, anybody who invests in the private placement will be up 50% on your money because the stock will be at 30 cents or higher. And we'll have that warrant there, which will start to become in the money. Just as a quick reminder, you know, you look at some of these situations that we ended up investing in last year in the placement, like Southern Silver, which has been down a lot lately. And geez, it's already all the way down to 31 cents. That is a strong buy, folks. I didn't realize it got that low. In any event, you know, we ended up coming in here last year at this time around a dime. And we ended up getting into a deal where we negotiated a 1.1, I think it was 1.1 million that we raised at a dime, and then that had a 15-cent warrant. So even in the case where the stock is down, I mean, we've tripled our money in the investment itself with the shares, but we've also had, you can tack on another 150% because of the warrant. And the reason is because we can exercise that warrant at 15 cents at any time that we want to, and that's a 5-year warrant in that case. But those boost the returns considerably. So it's like, you know, if you bought this at 10 cents in the open market and you got it run up to 65 like we saw here, that's fantastic. Let's use 60 cents as an example. I think it'll go back there. Certainly, we've hit it twice, and we'll see it again probably in the fall or winter this year. But you're talking about, you know, 5x, 6x really technically from 10 cents to 60 cents. And then in addition to that, you've got another, 45-cent profit between the 15-cent exercise and the 60-cent share price. So if you were to exercise it and sell it at that price, another 45 cents. So you add the 45 cents to the already 50-cent profit, and instead of making that, let's call it 500% gain, you're now looking at a 950% gain, which is huge. I mean, you're basically making twice as much money by going into the placement if you can versus the open market. So look, you know, these deals come and go in spurts, and right now we've got Castle Silver. We're just closing up on Southern Silver and Orca. Orca, I believe, is going to close tomorrow. Southern Silver, I need to get an update, but they're about closed. They're about done. And so those were two. And then we also have a very small offering in Medallion that's coming out this week. Most of that is gone. Excuse me, but that's another one that's going to be hitting here. And then you know, the big one though right now that I want you to focus on is Castle Silver. because both you and I'm sure we've got a lot of different positions in the gold and silver area, but something like cobalt comes up, once every few years. I'm going to go back to this page right here, which is from Platts.com. There's a number of articles like this out on Bloomberg. When you go and look at the supply demand features in lithium and cobalt, lithium is going to be strong going forward, but you've also got a ton of companies that went into the initial rush and launched businesses and went exploring and raised money and that are trying to move towards building a mine. And so in 2, 3, 4 years, you're going to have a lot of supply come on the market that was generated from the initial move in lithium. Still going to be a bit of an imbalance, but the imbalance that's clearly there, which is the biggest imbalance in a commodity that we've seen, it could be ever, in cobalt coming up. Cobalt is nowhere to be found in terms of locking in supply from those that are the buyers. And we see that from, I'm going to send a link to one of the interviews with the CEO, Frank Bassa, so you can watch what he has to say. And I spoke to him on the phone about this as well. He went to Asia a couple of months ago to talk about potential cobalt buyers and talk a little bit about their project, which is a near-term producing potential project. And everybody was interested. He came back with term sheets, spec sheets. They had to go do a bulk sample immediately because of all the interest to see if they can get the specs down, which in a lot of cases they will be able to, because the Asian buyers are just ravenous for cobalt supply. Cobalt has gone from around $10 a pound to 25. It's been as high as 55 in the last couple of decades. And that's where it's going again. I mean, we're in a period where, literally cobalt every other day for the past couple of months has been going into new high territories. It's, every week, certainly, most of the weeks of 2017 have been up to new highs in cobalt prices. It's a supply crunch. There's a lot of demand that is going to be there for cobalt just from the lithium-ion battery sector alone, which is driving lithium. But the dynamics for cobalt are extraordinary, and why I like Castle. So let's get into this bad boy. In a nutshell, before I go through this presentation, I'm only going to stop on a couple of slides. In a nutshell, this was an Agnico Eagle silver mine, which is what Castle owns here now. And Frank Bassa is a metallurgical engineer that worked in that mine in the early 1980s for Agnico. He realized that, because usually with cobalt, one of the main reasons I like this play a lot is usually with cobalt, it's a byproduct metal. And when you have a byproduct of silver or nickel, you're dealing with a situation where you've got to have a robust market for that primary metal, and then cobalt is going to be a byproduct of that. What happened with Agnico's case is silver collapsed in the 80s and 90s. It was not a good price environment to be really focused on silver mining. And so they let this mine go. In really all of the veins that they went into underground were focused on the silver veins that had cobalt pieces. What they've got there now are primary cobalt veins and an ore body that has got a ton of high-grade cobalt, visible cobalt, that's there because the miner in the past, the miners that worked on it, they were looking primarily for silver. This cobalt camp was a massive silver producer. We will have silver production from this particular asset, which is fine by me. But cobalt is where the juice is. And so what we have with the situation is that Frank had gone to Agnico and said, you guys are leaving a lot of money on the table by just throwing the cobalt away. He created a separation technology that separated the cobalt effectively from the silver operation, and they sold over $50 million worth of cobalt while he was there as a byproduct. And so this guy knows how to deal with cobalt. He knows how to process it. He knows how to separate it, and he knows how to mine it, which is all very, very important in this space. And so he essentially 7 years ago, the reason I recommended Cruise Cobalt really was for two reasons. One is that they're very promotional, and the word has gotten out quite a bit because they promote a lot, and I figured the liquidity would remain there. Excuse me. But the other reason is because they were a relatively early mover in locking up some of the prospects around North America that have potential cobalt properties to it. And when I say early mover, excuse me, that was 18 months ago. In this case, Frank and his wife, who's also an engineer, locked up these leases and prospects 7 years ago. And so this thing was secured and patient in waiting for this opportunity. And now the opportunity is hitting like a freight train, and they're moving this thing forward light speed. So we've got a fully diluted share count, as you can see, 66 million shares. So good share structure, insider ownership, pretty spread out. It's a usual type of a deal on the TSXV. So here's the cobalt price chart, which we see back going into January. It's pretty much tapered off to gone up slightly. And 94%, as you can see, of cobalt produced as a byproduct of nickel and copper, also silver as well. And it's constrained by that production. So, we've had a little bit better prices in copper, nickel not so much. This cobalt deficit it's really going to be, I think that the main, everything that I can determine, the main disruption in the line of supply and demand is going to come in the next 18 months. And that's because we've got two big mines that are going to be coming on production in mid and late 2019, one from Glencore. I forget the other company that's launching the other mine. Pretty good sized production, could alleviate some of the constraint. Now, we all know that when you have a mine that is scheduled to come online at a certain point in time, many times, in fact, I think the majority of times, those things run into hiccups. If we see one of those mines delayed for any particular reason, I don't think that we would know that until later in 2018. The cobalt price, wherever it is, could just go bonkers from there. But I think it'll be a lot higher than it is today. In a year, it'll be a lot higher. So this constraint that's going to be there in 2018 is going to be significant. I think that this is going to be on the radar of a lot of investors. Right now, we have literally the first sort of batch of people that caught wind of this, and there's not a lot of folks that are really familiar with the situation in cobalt yet. But that's coming, and that's why I think we can make a lot of money. You can make a lot of money in Cruise Cobalt or the other ones as well. The sector will do very, very well. But in this case, we have a situation, and I'm going to get into the dynamics of this particular mine. But just as an aside, while we're on the slide, cobalt's used in 3 or 4 of the 4 main lithium-based batteries. And the problem with a lot of the cobalt is that over half of it is mined from the Congo. And there's super issues there, not just the political instability, but labor conditions. Ideally, the big boys, the Teslas and those folks are not going to want to buy their source there. Certainly, there will be plenty of demand for a North American supply source. You're going to see some quotes here. There's a lot of interesting data that's out there. The Castle Silver Mine is in Ontario, as you see, and I'm going to go to couple of slides that I think are very important. This might be one of them here. So, what these guys are doing now, one of the big advantages here is the underground ramp, if you will, it's already built, and the permits are already there. This has been a previously mined area, the underground workings. It's called an adit, which is the ramp. It's actually very expensive to build. It's already built. It's going to end up adding, it's probably adding $1 million plus worth to the project just from having that in place. There's a lot of work that has been done here already. First Nations is all set. Exploration permits are all done. I mean, this project is further along than any other one I've seen in the new cobalt area, sans the Glencore and other main pipeline projects that are out there for 2019. Really good recoveries and concentrate rates. I mean, they've got data on this bad boy that is really very, very good. The infrastructure is great. The camp is well populated. There's areas where I think getting skilled workers is not going to be a problem. It's very, very far along, and now we're in the process of bulk samples. They're being put through. Another part of this deal that's interesting is they have this proprietary RE20X hydrometallurgical process, and it's what they want to do is produce high purity cobalt powders for batteries. And what they're testing it on is not only to take it from their own supply underground to be able to do this, but they believe that this process, which is being tested right now, can recover cobalt and lithium from spent lithium ion batteries. And SGS is doing that testing on that right now. I mean, I look at this as a potential bonus. That's a huge business. Nobody's really doing it. I mean, you've got all these lithium ion batteries that people are they don't know what to do with them. Imagine if you have a company that's going to end up taking them in and then getting more of the cobalt and lithium out of the batteries themselves. It's a huge source of potential future supply and revenue. Makes this a very interesting deal just with that component. But I look at that as a bonus. The most important part is that the separation and the process that they've basically created years ago, it's going to help us produce a very high purity powder. And as we know from those of you that have been involved in the Zenyatta story with the graphite sector, there's different levels of product in cobalt as well. And powders are a very high margin area within the cobalt space. So what they're looking for now, after they close this financing up, we're going to have assay results from bulk sampling, also new drill programs. We're going to see the test results from the RE20X. We're going to see the extraction process, and this group has been, I think, very proactive in working on some additional investor awareness. So I think that this deal is going to become on the radar of a lot more people as the year progresses. We might see a name change. In fact, I'll talk to them about that after we get our money in and get this thing secured. I think whether you call it Castle Cobalt or Castle Resources and just take the silver out because it's a cobalt play primarily, I don't know, but it probably would help a little bit. And the bottom line is that the reason I'm putting 6 figures in this investment, Canadian, is because I just want to have a direct interest in ownership in a very prospective, near-term producing, high purity, high grade cobalt mine. And because the world wants cobalt. We saw this, there was I don't know if it's going to pull up on the symbol yet. It's called Cobalt 57, I think it is. Maybe it's a number like that. Wrong one. But there is a company that just launched a $200 million offering. I'm going to pull it up on StockWatch because I know I have the symbol in here. It's a Canadian traded deal. And what these folks are essentially doing is they're going to be locking up a lot of the supply too. So you're going to have this group, Cobalt 27. And, this was done 95% by institutions. There really was no retail participation that was done here. They're accumulating and acquiring physical cobalt and storing it. And they're also starting to lock up future supply, sort of like a streaming or a royalty company. So they could eventually be, say, a company that would approach Castle to secure some of their supply. If you've got a fantastic mine from the standpoint of having the mine itself, you don't really want to give a lot of that away in terms of a stream or a royalty that will take money off the top. Sometimes it's okay and can be used for a portion of the financing, but this cobalt is going to be so valuable that you want to have every last drop of it. And so This Cobalt 27 is another way to invest into Cobalt. It's probably the second best way to do it besides Castle that I would suggest if you just want to take no company, not really much company execution risk, and just want to own more of the direct asset. These guys will do really well. It's it's not going to be as volatile, or it doesn't have the potential upside that Castle does, but it also doesn't have the downside risk. But I'm making essentially one big bet in the space. I'm extremely comfortable with Castle Silver Resources. I would strongly suggest that if you're an opportunist like I am, you jump all over this deal. We're getting $1 million here. We have 650 done. This thing, we should have 3 million in interest by tomorrow. If you guys understand what I'm saying with the situation, if you know anything about what is happening in this Cobalt space, it's urgent, it's very opportunistic, and I think it's just a slam dunk. How high could CSR go? Dollars a share. I mean, that's what I'm looking for. I'm looking for a 10 bagger, maybe a 20 bagger. If it goes to $1 only, I would be disappointed. That's a 5 bagger. So I'm looking at this as an 18-month investment, approximately somewhere between, call it 9 and 18 months to have a big stake in this particular asset. There's a lot of news coming the rest of the year. There's a lot of investor interest that's coming, and this is our last bite of the apple to get into this placement. So if you're an accredited investor, you should contact me very, very quickly. The minimum investment is going to be set at 100,000 units. So you know what? I've got that wrong. I'm mixing deals. We're going to do 75,000 units, which is 15,000 Canadian is going to be the minimum, which is low. So we're talking about a little over 10 grand US. Because we have a limited amount, I'm going to leave the cap right now at, we're going to cap the high end at $100,000 Canadian. That might come down if we get 1 or 2 of those orders. Then it's going to come down probably to 50,000 max. So if you're interested in 100 grand, definitely jump on it and get back to me soon. Or anything in between. If you want it, you got it. Just email me right away with the amount that you'd like, and I will go ahead and I will introduce you to the company, and we will go from there. But I hope everybody's having a great long weekend, and that's it for tonight. We'll talk to you soon.